Mayuresh Joshi is with us to talk about his sense of the markets and stocks. And Mayuresh, today, good results and margin expansion is getting amply rewarded. And of course, there is a severe punishment meted out to the poor numbers. Symphony, KPIT, Cera Sanitary Ware, Idea. 4 names that have had really strong movements. Maybe a VIP, I'll add to that list. What has stood out for you and why?
Afternoon, Neeraj. So clearly, I think, yes, the margin expansion story or the deacceleration story is clearly playing on all these stocks. So respectively, I think if you look at stocks like VIP, I think exceptional set of numbers when it comes to the EBITDA front. But again, I think one needs to note that a lot of raw materials that they import is dependent on the dollar. So I think any dollar-rupee movement affects their profitability by a huge way. An appreciating dollar, so I think that helps the company in a significant manner. If you look at Symphony again, Neeraj, I think great set of numbers, and again I think hearing the management, and you really expect 20% growth coming in on the top line on the lower end of the band, and if you expect the blended volume growth to stay between 20-22%, both domestic and international put together, our own take is that the EBITDA margins should sustain about 26 to 27% based on 2 factors. A, the pricing power that the management was talking about because of the 50% odd market share that they've got in the air cooler market with the fall in commodity prices. I think that should prop up the EBITDA margins. And B, I think the operating leverage benefits that one really expects to come through with a drive-through in volumes expected over the next couple of years should ensure those EBITDA margins stay up. Cash on books, healthy return ratios. I think the stock, if it continues to deliver, I think another 20-25% even from the current levels, not ruled out. And yes, I think a blip of 10-15% if the market corrects is again not ruled out. Idea specifically, I think weak set of numbers on all counts. I think if you're looking at the kind of competition intensity pressure that one really is talking about, you talk about the ARPUs coming down, the MOUs coming down, the rural side of the business, which is picking up for a lot of telecom operators. Structurally, I think that means that the RPMs sequentially would keep on remaining flat and under pressure. The kind of OPEX that these guys have to do, again, I think will take a toll on the return ratios of these companies. So I think substantial investments need to be done both on the infrastructure front and even on the mobile data front. I think the kind of growth that one really expects would remain more or less soft for the better part of FY16. So our take is that telecom stocks structurally are probably on a weak side of things, considering pricing power, considering cash flows remaining weak, affecting return ratios. And clearly, I think stocks like Cera, I think we're not covering that stock entirely, but again, I believe the numbers were not that great.
Numbers are not that great. That's Cera down about 14% as we speak on that counter. Real slam dunk coming in there. But this one has been an expensive name. However, I just want to get an idea at 255 and Ashwini, come to you for that.
Well, I think I need to still give you the other ideas. So let's start with that. Dish TV is a buy with a stop of 106, target of 118. KPIT, while it's come down from the highs of the day, I think it's still a breakaway gap. So you can buy it with a stop at about 132, target of 146. And Larsen is a sell with a stop of 1545, target of 1460. Now, the idea right now is Dabur, that's a sell with a stop of 268, target of 252. It's broken below its 200-day moving average. So today, Dabur, Britannia, both are looking weak.
Right. Mitesh, what about you? What is it that you'd recommend?
I would suggest a sell on Infratel that's breaking down key levels and giving negative crossovers as well. So sell with a stop at 399.5 and look for 360 as a target in the next 4-5 sessions.
Okay, thanks a lot for those ideas. Now one more management, and again a company which has shown EBITDA margin expansion, not surprising, but yes, they have shown that. Sales were a bit low though, 6% growth on a YOY basis, but obviously the EBITDA margin expansion leading to a good PAT growth of 33%. H.M. Bharuka, MD of Kansai Nerolac, joins us right now on the show. Good having you, Mr. Bharuka. Thanks so much for joining in. I'll cover the good part in a bit, which is the EBITDA and the PAT numbers. Let's first talk about what is the least good part of the numbers, and that is the top line growth, 6% odd. Are you satisfied, or would you have hoped for more? And can things turn around because of the festive season and the end of the monsoon season in quarter 3 and quarter 4?
So if you look at, for last 9 months, the top line growth has been coming down, and mainly because of the raw material deflation which are there. So there is a less inventory which dealers are keeping. Apart from that, in decorative, if you look at the project business has not been doing well. But if you look at overall volume growth, even in the first quarter we reported double-digit growth. Second quarter, despite 6% value growth, we have a double-digit volume growth. So volume growth is robust, partly contributed by the price reduction as well as the product mix change. So yes, you can say we are not fully satisfied with this growth. The growth can be better. But however, interest rates have started coming down. There are a lot of positive green shoots we are seeing in the economy, even though the monsoon has not been very good. And second quarter, the Diwali is now almost delayed by a month compared to the last year. So we expect third quarter to be better than the second quarter. So I think overall these are satisfying number in the given circumstances.
You're saying that in the third quarter, you reckon that your top line growth can be better than the 6% that you've shown. Now, at the current volume growth, if indeed the volume growth were to improve marginally, would you also be able to undertake pricing upticks in order to clock in double-digit growth, or you don't think that will happen?
No, I don't think price increase is on the card. On the contrary, we have been always maintaining if we get a reduction in the raw material prices, we would like to pass on to our customers. We had done it in the first quarter. We have reduced our prices by 2% in decorative market. The margins are decoratives are better. Auto margins are still under pressure, I would say. So I don't think there's a price increase on the card. On the contrary, if the rupee dollar stabilizes and the crude oil prices stay where they are, we would like to pass on the benefit to our customers.
Got it. But Mr. Bharuka, in which case, how would top line growth come by? Do you think volume growth, which is already looking strong, can actually go up substantially for you to be able to clock in better sales growth?
In the past, if you look at the paint industry, value-wise, we have been giving a double-digit growth. And it is only in the last 9 months it has come down to a single-digit value-wise. But as I mentioned, Diwali is this time in November, so October sales should be good. So we expect third quarter to be better. So second quarter could have been better, but for the Diwali. So third quarter will definitely be better as far as decorative is concerned, and I am sure it should reflect even on the auto numbers.
Okay, and in terms of margin expansion, given 16% is what you've reported for margins, and it was expected given how input costs have been favorable. Do we see more expansion in margins?
I think these are decent margin, and we would like to pass on the benefit to our customers. As I said, in decorative we have already done it, and if it continues we would do it. As far as auto is concerned, our margins are still under pressure because we never got the price increase when the crude oil prices were very high. So automotive prices are under pressure. So I am not still sure whether there is any scope for price reduction on auto side, but definitely there could be a scope for decorative going forward.
Right. Your working capital intensity, I believe it came down at the start of the year to maybe 55 odd days, which will probably increase your return ratios as well. What is that currently standing at currently?
No, this is during season we maintain a high inventory to cater to the demand, but otherwise I think on overall basis working capital has improved, and partly as you rightly I think reckoned because of the reduction in the crude oil prices. So the working capital cycle has definitely bettered. So overall we maintain a good cash position. I mean we have almost 300 crores cash lying on our balance sheet.
Okay, that is good news. But two, you've already answered part of my question. Most people estimate your EPS to probably grow at about 28 to 30%. You've clocked in 33% for this quarter. You anyways done that. My last question to you, sir, would be from amongst the various segments that you have, you've spoken a lot about decorative and how that is shaping up. But from amongst the segments that you have, what do you think will drive growth for you over the course of the next couple of years? Because I believe most people are working with the fact that because of revival across housing, automobile and infrastructure sectors, your growth in FY16 should be much better than FY15, the growth rate.
See, as far as we are concerned, almost 50% of our sales come from the industrial, and within the industrial, auto contributes to the major revenue growth. So we expect auto number also to be better than the first 9 months. However, as far as we are concerned, auto we treat as a specialized product. So growth in auto does not mean our top line will grow in line with the auto number growth, because we keep introducing new technology product, and we keep reducing our volume solid to our customers. So overall volume growth may not be in line with the customers' auto growth numbers. However, in case of decorative, we definitely expect a better result both on top line as well as on the bottom line. And general industrial segment, looking at the infrastructure investment which is taking place all around, we expect even general industrial segment to contribute to the top line growth. However, the liquidity still remains under pressure as far as GI business is concerned.
Okay, you're saying that there is a bit of a lag that you're experiencing in the automotive business, but we were, as Neeraj and I were just discussing, you've introduced new products to kind of prop up that business. What's the missing link? Do you see the segment picking up? Why is it that all these product launches are not translating so much into traction on the demand side?
In auto, we already have almost 60% market share. So new product launches will never give us extra market share. What is important is new product launches. We need to continue to maintain the technology superiority we have. And our number are directly linked to our customers. So if you look at auto numbers, while four-wheelers continues to do well, but two-wheelers actually have a flat growth, and the tractors are still negative. And with the kind of monsoon which we have seen, we are not expecting a good growth in the two-wheeler. I think it all boils down to a passenger growth, which is definitely going to do well. We only hope with the reduction in the interest rate and further lowering down of inflation, maybe interest rate will go down further. So there is a lot of positive sentiment which has got created. Maybe that is going to drive the auto numbers coming forward.
Okay, we wish you all the best for the future, Mr. Baruka. Thanks very much for taking out the time and giving us more details about your numbers. Just want to mark Concor in the session, because that's another stock which is facing pressure. So down about almost 8%. And then there's Shrey Infra as well, which is, you're not seeing too much excitement there. So down about 6.5%, 7%. And some of those reaction to earnings. Inox Leisure as well, down nearly 10%. We'll take a break. When we come back, the last half an hour of the session. Bring that for you.
Clearly, business is going to come under increasing competition, under increasing threat. One example of this is, we had a number of setbacks in large project loans. And so increasingly the flavor of the moment is, let's all make housing loans. Of course, when you make housing loans, you better be careful you're not picking up the lower risk, the higher risk housing applicants, and venturing into an area which is already well served, at least through traditional means. How do you make sure that as you move more into this area, you're mitigating risk and making the right kinds of loans? Perhaps the use of the data that is being acquired either by your bank, by the credit information bureaus, but also that's available on social media might be useful. How do we use this? Very important question for banks. And then with all the data available, it's also important in not just identifying customers and serving them better, but running the bank better. And here again, I would say we still have challenges. For example, we have the large loan database that we have put in place. It certainly is surprising to me that before this large loan database was put in place by the Reserve Bank, banks didn't quite know who all had lent to a particular borrower, because there was no centralized source of information on that, at least on a systematic basis. But even in operating the large loan database, we have found hiccups in getting the information from the banks on time, in the right format, with up-to-date details on the performance of the loan. And that is suggesting that IT and IT usage hasn't penetrated into the banks as fully and as properly as we would like. The entire bank is still not fully integrated in terms of IT usage, such that on a daily basis it can spin out what the details of these loans are, what their performance is. It still takes time to put this data together. If it takes time to put this data together for the RBI, it also means the bank itself doesn't know on a daily basis what is happening. And it is important that it know on a daily basis, as certain incidents in the banking sector have certainly revealed. If you don't know the picture on a daily basis, there are activities that can pile up over time, which can be extremely risky for the bank. So identifying these kinds of activities requires timely information, and have we got enough timely information within the bank to make these kinds of judgments? That is something that certainly we have to think. Second set of issues, as I said, was security. That very important that we all pay attention.
Okay, Dr. Raghuram Rajan talking about how information technology is a very positive move once it gets adopted by banks. So essentially talking about the space of fintech in the business model of the financial sector. Sandeep Wagle joins.
Before that, I just wanted to speak about Inox Leisure.
Oh yeah.
Just wanted to mark that stock. It's down 10% now, 10.5 actually to be precise, 241. It's just completely crumbled, and just that little bit of math. A lot of people are bullish and rightly so on that space, but just a little bit of a math. They've not done too badly. Sales up 26%, PAT up 43, or EBITDA up 43%.
We should actually have the earnings come up on the screen.
Yeah, so the PAT and the sales are all okay. There's no problem there.
4 times.
But if you add up the PAT for the year, the estimates for the PAT for the year are about 80 to 85 odd crores on a current market cap of 2347 or 2300 crores. The stock is trading at some 28, 29 times. So it's just maybe a bit of profit booking. It's rallied about 12, 13% in the run up to the numbers, and maybe some bit of profit booking. But otherwise, I can see no known demons in the numbers, quite frankly. EBITDA performance strong, PAT performance strong, sales not too bad. But there's just a bit of punishment being meted out to this one. Nothing out of the ordinary that I can spot in the numbers till now.
From the numbers perspective, it's not a story that would see such an adverse reaction. But like Neeraj said, I think it'll be the story lies in the time-wise performance of the stock over the last 3 months, over the last 1 year. Because on an estimated earnings for FY16, we are looking at the stock trading at roughly about 29, 30 odd times. That, mind you, to the benchmark is a significant premium. So the 3-month chart will come up for you, and the this year chart would reflect the kind of interest Inox Leisure has seen. That's 8% for the last 3 months, and you can see particularly through September how the stock went up with confidence into the earnings. So, a bit of that froth being booked out, and that's a 1-month chart. And from a year-to-date perspective, if you look at the 52-week chart, you've seen that Inox Leisure has been rewarding for investors. So that's 36, 37%, 45% for the year for 52 weeks. That perhaps is the only explanation that we can find as of now between Neeraj and myself to highlight why the stock has fallen despite good numbers.
Okay, let's get in Sandeep Wagle's thoughts as well. Sandeep, a quick word on Inox and then your recommendations for the day. Sandeep, can you hear me?
Yeah, a sell in a Motherson Sumi, stop loss 248, target 231, and a buy in a Kane India, stop loss 154, target 171.
Inox, Sandeep, Inox Leisure. No, I don't think Sandeep can hear me, nevertheless.
Are you asking me about Inox Leisure?
Yes, Sandeep, I'm asking you about Inox Leisure. Would you trade it?
No, it's cracked, Neeraj, already. It's already up down 9%, and I do see levels of 225 coming in. Maybe even 220 is possible, but the stop loss will not match. The stop loss has to be above 270. So yes, on a bounce back to around 258, 260 in case it comes, which is very unlikely. So in that sense, I will not trade. But if somebody has sold it, I don't think we should be in a hurry to buy it back.
Mayuresh, it's a crowd favorite. Sandeep, thanks for that. Mayuresh, it's a favorite, the theme, PVR, Inox Leisure, etc. But cracking 9%, no reason that I can figure out. What's the view that you guys have at Inox Leisure?
So clearly, Neeraj, in the film exhibition space, I think let's do a comparative check on Inox and PVR. If you look at the average ticket prices, Inox close to 165, 170 odd rupees, the spending per head between 47 and 50 rupees. For PVR, it works out anywhere between 177 to 185 in terms of ATPs. In terms of spending per head, it's close to around 80, 84 odd rupees. Again, structurally, Neeraj, I think the kind of expansion that these guys are doing, Inox expected to add around 57 odd screens to its 384, PVR adding another 60 screens to its 484 screens. So clearly, I think per screen addition, if you take up around 25 odd lakhs, you're still talking about additional capex for the better part of FY16 and the first half of FY17 to be anywhere between 130 to 150 odd crores. You look at the cash accruals that probably come through, both in terms of ticket sales, food and beverages, and the ad revenues coming through. Inox has bridged the gap with PVR when it comes to ad revenue per screen. But is that substantial enough to probably say that the return ratios in terms of ROCEs will move up? PVR's ROC is close to 9.2%. Capital intensive business, cash flow is not too sure because it depends a lot on what the content comes through in terms of films. And yes, for this quarter, PVR might report an exceptional set of numbers with Bajrangi Bhaijaan, Bahubali actually hitting box office records. So in that sense, I think for a quarter, if you exclude that, if you correlate for the entire year itself, the cash flows look a little bit bleak considering the kind of expectations that one really has. So it's more a case of expectations rather than numbers delivery. So I think the stocks have moved up significantly. So I think I'll wait for declines for these stocks before we finally take calls.
Okay, wait for declines before taking fresh positions in these names. Time to get in closing strategies. Just about 7 minutes to go before we wrap up the session and the week. Mitesh, come to you. What is it that you'd recommend?
See, I would suggest a BTST on Infosys. I think that's one stock which is closing with strength in a weak market. So keep a stop loss below 1138 and look at targets of 1170 for Monday.
Okay, Ashwini, what about you?
See, power stocks have done very well. So there's a power stock called GIPCL, Gujarat Industrial Power. That's a buy with a stop of 82 and look for targets of 96.
Go. That is Ashwini's recommendation. Up 6%, 85 or 86 is where that one is trading. Well, lot of activity at the broader end of the spectrum. Let's quickly get in Darshan as well as Yatin to tell us what dealing rooms are recommending in the session today. Darshan, to you first.
See, Sun TV is something that dealers are talking about. The counter is down in today's trade, but there is a buzz of a very big corporate announcement that could come in on the counter. We're not sure what the corporate announcement could be, but this is the general sense that we are getting among dealing rooms that there is an anticipation of a possible corporate announcement. The other counter which dealing rooms are recommending on the long side is Axis Bank. Given the fact that over the past 8 trading sessions, the counter has been clocking gains, it's doing well, it's outperforming the bank Nifty also. So Axis Bank on technical trends also dealers are liking this counter. So Axis Bank. And finally Motherson Sumi is down almost 5% in today's trade. Dealers recommend accumulating this counter at lower levels. They believe some HNIs have started accumulating the counter and they believe there is limited downside from these levels on Motherson Sumi now.
Thanks for the Darshan. Yatin, what about your sources?
Neeraj, Asian Paints will report its numbers post the market hours today, and dealers are expecting a weak set of earnings, especially on the volume growth front. Also, things would look disappointed given the fact that there could be some pressure on the pricing front and also the demand front. So Asian Paint is something that dealers are recommending as a short sell. Apart from that, Cadila is something wherein the results also were healthy, and going forward also there is a lot of interest coming in from domestic funds as far as this pharma stock is concerned. So Cadila Health, purely on the basis of F&O trends, dealers are recommending as a buy. And in the cash market segment, Aero Coated is something wherein there is a lot of HNI interest, and Aero Coated basically is now into a lot of intellectual property rights as far as their water soluble fibers are concerned. So this is one interesting space wherein accumulation is seen, and going forward the company's expansion will get in earnings is something what dealers are talking about. So this is one stock in the short term that dealers are betting on.
Watch out for that. Thanks a lot, both of you, for giving us those updates. By the way, an MNC stock, 3M India, is trading at fresh life highs, up 7.5%. The volumes aren't the best, but 12,325, close to its fresh highs, but it did clock in the fresh highs in today's session, so watch out for that one. But Ashwini, a few active stocks. KPIT is not at the high point of the day. I know it's a recommendation from your end. My question is, can somebody buy it in the closing moments of trade and carry forward the positions on Monday at 135 currently?
See, I would think so. And basically, once something holds on to a 8-9% gap, some fresh trend has started. Now the next move maybe takes a couple of days to happen, but definitely it's a buy here, and chances are you'll get 165, 170 soon.
On the telcos, and I'm including a Bharti Infratel there. Mitesh?
So I have a negative view on Infratel, that's for sure. I think we've seen some kind of breakdown happening in Idea today, and it's a low beta stock, but it's managed to kind of hold on to 137 levels, which was the swing low sometime in September. I think if it breaks 137, I would pen it down for more downsides, possibly to levels of around 129 or so. So I'm negative over there. Bharti is the only stock which to me is kind of slightly positively biased, but I think with today's breakdown, I think it might get into some kind of consolidation between levels of 344 to roughly about 370.
Very quickly, financials, so we haven't discussed them today, but between Axis, SBI, maybe ICICI, maybe HDFC, and not HDFC Bank, HDFC, would you carry home longs, or would you initiate any fresh longs in the last 3 minutes of trade?
See, given the way the market is moving, very difficult to say whether this Bank Nifty rally will continue for tomorrow or not. I would like to play them, in terms of a range. So around 17,500 you like to buy some private banks, and around this 18,000 type of zone you want to exit out, because this does not look like a breakaway style market where you buy something that's closing at the highs in the large cap indices and carry it. So if you are making some money around these 18,000 type of zones, it's good enough to book profits.
Okay, gentlemen, let's start winding up the market. It's been a good session for the week also. On balance, I think this would be one of the most stable weeks that we've seen. So the market closing at the heels of 8,300, and that's pretty much reflected in the way the broader markets have performed as well. Marginal gains about 0.7% to 1%, but not just going by the final percentage gain for the week, but more in terms of what the market has been trending like. It's been reassuring and encouraging. The Bank Nifty doing okay, so Axis Bank, ICICI Bank, Kotak Bank, HDFC Bank, all of those names stand out. There's ITC, Ken, some of the other oil and gas majors, ONGC, all doing their bit. BPCL also holding out. On to the losers, and actually that pretty much is the story of the day. The sell-off in telcos, at least among the large caps. It's really Idea, which is down 8%, Bharti, which is down close to 4%. That's a cumulative loss of 12% coming in on the index alone from the telecom space. And that, to my mind, will be the summary of the session. Market weighed down and big sell-off in telecom.
Well, and actually sticking to a telco, look at Bharti Infratel as well. That stock has corrected quite a bit. Shrey Infra is a prime example of buy the rumor, sell the news. Sell the news maybe just before it comes out. 58 rupees when the first inkling of the news coming in a day came in. Now 50.60. Concor, a big disappointment today, down and out. HCL Info, not the best of numbers, down 5%. Actually, bad numbers brings me to Cera Sanitaryware as well. Not really bad numbers, but Cera, the margins contracted for the stock, and which is why I think that disappointment there. Otherwise, it looked an okay set of numbers, but 11.5%. Actually, Kansai Nerolac, again, a company, of the paints business, and not bad numbers really. The management commentary sounded okay too, but the stock flattening out completely. What's done well though? One of them is Symphony, about 8% higher, good going there. KPIT continues to stay up. I think a very strong show, and it stayed up 9.5%. VIP takes the cake, quite frankly, in the mid-cap space, up 20%. A lot of bulk deals there, even at the levels of 103 odd or 102 half odd, and strong EBITDA performance as well. So VIP clearly the mid-cap or the small-cap stock of the day. There's been a bit of a correction in certain high-flying stocks. So NIIT is correcting, taking a bit of a breather, 4.5% on extremely high volumes. On the NSE, it's traded about 4 million shares. So gives you an idea of the kind of volumes that have happened there. Suzlon is a bit soft, down close to 4%. Already spoken about HCL Info. That one on almost a crore shares traded is down 5.5%. The volumes are a giveaway here. What else on the gaining side? I was speaking about 3M India, good going there. A recommendation from one of our experts, Gujarat Industries Power is up 6.5%, decent enough volumes there. And First Source Solutions on over 5.5 million shares traded is doing well. Last but not the least, keep in mind sugar as a pack. It's really doing extremely well the last few sessions, and in today's trade too, they haven't done too badly really. They're in the green, most of the sugar names, most of the actively traded ones at least. Let's get in final thoughts from our experts. And since on the topic of sugar, Mayuresh, I would want to come to you. It's been a good week for the markets, up about 1% in an otherwise choppy world. But I want to come to you on sugar. The stocks have done very well. There are a lot of people now expressing optimism on the sector. Are you in that camp? And if so, what do you guys at Angel Broking like from the sugar space?
So clearly, Neeraj, I think let's have a look at the structural side of the story for the sugar industry. And if you look at the demand estimates put through, and if one really assumes that because of drought, the numbers that one was initially pegging at 27.5 million tons comes actually close to 25.5 million tons, with demand expected to be around 24.5 million tons. Add to that the inventory, the carryover inventory of last year of 8 to 10 million tons, and the mandatory exports that the sugar companies are expected to do at 4 million tons. You're still left, point number one, with excess sugar supply in the system. B, I think there is a lot of festive season and festive activity going on, and you've actually seen some amount of price hikes being taken place. So I think the sugar quote somewhere around 25-26 odd rupees, and again I think that is sentimentally aiding the sugar stocks. Point number three, the kind of debt one really has on the books of a lot of these sugar companies, assuming their SAP and their FRP payments and the kind of arrears that are due to the farmers at 16.5 thousand odd crores, that is going to take a toll on how their operation performances and efficiencies actually work out, because a couple of factories, both for Bajaj Hindustan, Balrampur, over the past few quarters have actually shut down. And fourth, I think it's a typical 2-3 year cycle. So I think the on-off cycle continues, and it was expected that this year would be the off cycle for sugar, which basically means that lower production, higher demand would prop up prices. But again, our take is that recovery rate staying around 9.5% for the sugar industry as a whole. Cash flow still struggling. The cycle probably would turn in the favor of the sugar industry, at least on a fundamental scale, in the next crushing season. So clearly, I think you're seeing technical moves happening out here. The technical moves might continue because sugar prices are still high. The raw sugar prices quoting on the international bourses remain high as well. So clearly, technical moves still not ruled out, but fundamentally, I think still a while away.
Okay, Mayuresh, we'll let you go there. Thanks very much for giving us those details, your insights, and your conviction ideas in the market. Just want to mark some news coming in on Wipro and IBM, some sort of collaboration there. If the numbers didn't enthuse the market, maybe this deal in the works could. About 1.5% is how Wipro responded to earnings, down about that percent, over 19 lakh shares traded. Wipro, IBM in collaboration for Bluemix cloud development. So this is a product development collaboration that both the companies have done. Before we wrap up, let's go across and get in closing thoughts from Ashwini and Mitesh. Ashwini, I'll start off with you. What's your own sense about the coming week?
See, on the upside, we are hitting now very strong resistances on Nifty as well as the Bank Nifty, and hence it'll be tough going. 8400 is the 200-day moving average, but once we are past 8400, possibly a lot of short covering could come in. So chances are we are going to be compressed in this 8400 zone, and possibly we'll need some stronger news to get past 8400, because as you can see, good global cues yesterday, good global cues today. We've gained hardly 40 points. So that's not great action. I think some macro news is needed to get past 8400.
Mitesh, what's your sense? Thanks, Ashwini, for that.
See, I think a similar kind of outlook. I think to me also this levels of 8,350, 8,400, that zone of 50 points will be an extremely tough level for the indices to get past. We still haven't seen a breakdown. There was some tiredness in the momentum indicators, but that was kind of taken care of with the gap. So my idea that we might kind of keep drifting on the upside, not doing much. But overall, this looks like a market. If it breaks 8,200, might give you mild correction, or else it will consolidate between 8,220 to about 8,400 or thereabouts.
Okay, gentlemen, thanks very much for joining us and giving us that quick perspective. Appreciate your time as always. We'll take a break then, but when we come back, we will address Europe.